Move on to ITD Cementation. That's the company in focus. They reported a very strong showing in the past quarter. Revenue is up by close to 67% on a year-on-year basis. Profitability as well jumped up more than 70%. To understand about the past quarter and more importantly the way ahead, we're joined with Mr. Prasad Patwardhan, who is the CFO of the company. Hi, Mr. Patwardhan. Good morning and thanks so much for joining us on this show. Well, congratulations. I recall I met you and the team a year or so ago, or within the last 1 year. And you're always sounding very optimistic about FY24. It started off on the positive note. So give us a couple of details. Now, you were guiding for revenues of close to around 7,000 crores for this year. Now, a couple of brokerage notes says that they believe that you're going to go ahead and outbeat that. Do you agree? And also margins, you were telling us that it's likely to go to double digits. I believe in the past quarter, there was a one-off provision which pulled down the margins. So from the coming quarter onwards, will you get to that 10% margin?
Good morning, Nigel, and thank you for having me on your show. Well, in terms of the top line, in the last couple of years, we have seen a good flow of orders coming into the company, about 8,000 plus crores. And we ended the previous financial year with an order book of 20,000 crores. So that is helping us, with the execution strategy this year and in this quarter. We have done about 1,800 crores in the quarter, and you're right. We are pretty hopeful and confident that this year we should be somewhere in the range of 7,500, and maybe a little more than that as well. Let's see. I think we'll have more clarity as time goes by. In terms of margins, you're right. There is a one-off this year which has been a little bit of a drag on our EBITDA margins in this quarter. But as we have been saying in the past as well, we hope to see an improvement in the margins from Q3 and Q4 onwards of the current financial year. Q2, obviously, because of the monsoons, it will be a bit subdued. But otherwise, we are pretty confident of doing better post the monsoons, and you'll see an improvement in our margins. As far as the order book is concerned, in the last couple of quarters, the order inflow has been a bit slow. Right. But today we are sitting on L1 orders worth about 5,500 crores. And we expect those orders to be awarded to us maybe in the next 1 month or so. So with this sort of traction, and a very strong order book, we need to only focus on the execution, and we are doing that, as can be seen from our numbers for this quarter.
All right. That's a rather optimistic outlook coming in for this year, 7 to 7,500, perhaps even more. You'll probably close in to the $1 billion mark in terms of revenue this year, with margins improving in the second half in particular. Just wanted your thoughts on a couple of things. You said the last couple of quarters, orders were a little slow. I remember speaking to you the last quarter, and you said that last year's order inflow guidance was not met mainly because of an order from Bangladesh, which was moved into FY24. You've done 250 crores worth new orders in the first quarter. Your target was 8,000 crores in terms of inflow this year. Are you optimistic of meeting that order inflow guidance for this year? That's point number one. And secondly, what proportion of your current execution book is right now legacy orders? You said that would extinguish in the next couple of quarters as well.
Well, in terms of the order book, as I said, we are sitting on L1 orders worth about 5,500 crores. So this year, again, we expect the order inflow to be in the range of 8,000 to 9,000 crores. And I think that is definitely possible given where we are today. The second question was on the legacy orders. Yes, the legacy orders are there, and they are now a smaller proportion of our order book today. It could be, sub 5% levels. So we are in the process of executing and getting out of those orders. So they will be contributing to our top line during this year, but the proportion is diminishing as time goes by. And that is why we have been indicating that the margin should be, we expect the margins to start improving from Q3 onwards.
So improving to 10% plus?
Well, gradually, that is what we are looking at. That is our aspiration. It should cross 10% during this year. For the particular quarter, may not be for the whole year, because this year, as you have seen, first quarter the margins have been a bit low. The second quarter also will be impacted by monsoons. But in Q3 and Q4, we hope to reach double-digit margins.
Okay, all right. And just out of your total order book, how much of it comes in from the Adani Group? And payments are coming on time. There's no issue out there. I think you indicated last time a fourth of your book is coming from the Adani Group. You could revise that number.
That's right. It's more or less that number from the Adani Group. That has not changed significantly. And the payments, have been coming through. We have not had any problems in realizing our payments. They have been meeting their commitments on time.
Right. And the Ganga Expressway project, I mean, I was looking at your presentation and you've spoken about the Ganga Expressway project and the steel bridge over River Ganga in Uttar Pradesh. How much do these account for in terms of a value, and will they be realized in this year?
Well, the steel bridge over the River Ganga is almost complete. Maybe in the next 2-3 months, we should be out of that project. That has given us good margins and top line as well. But it should be out of our order book and our P&L also in this quarter or the next quarter. Ganga Expressway, it accounts for about 20% of our order book today. It is progressing very well. It accounts for nearly 20% of our top line in Q1.
Okay, all right. Final question then. Things are looking up, Mr. Patwardhan, and full marks to you and the team in execution. Now, there was a lot of doubts, but you'll have managed to deliver the goods. The only other point that the street is worried about is about the debt in the books. Now, there's always a bit of a worry that suddenly that could spiral up. If I'm not mistaken, it's closer to around 800 crores as we speak. So what is the trajectory on debt? Will it go up further from now? And what about your working capital cycle?
Well, we have seen the debt go up last year, but the growth in the debt numbers this year will be significantly lower than what we have seen in the previous year. There will be a little bit of increase in debt because of enhancement in the working capital requirements, as well as some of the investments that we are doing in acquiring plant and equipment. So while the debt number today is higher than what it was in FY23, but the increase is not going to be that significant beyond where we are today.
So
in
you
terms
had
of the
indicated...
working capital days, sorry?
Please go ahead,
Go ahead, sir.
Yeah. In terms of working capital days as well, we have been able to realize our payments from the projects that are under execution, and the working capital has increased because of the scale of operations has really increased. But in terms of number of days, it is at a very comfortable level of about 80-85 days net working capital. So there is no concern on the working capital as of now.
All right, 80-85 days is the working capital days. Just wanted to know that you had last time said that your debt would peak around 900 crores. So it won't go beyond that this year, right?
That's correct. That's correct.
All right, take that point. Thank you so much for joining in. Wish you good luck for the remainder of this year. It's been a good first quarter. Let's see whether that sustains over the next couple of quarters, and the order inflow guidance as you promised as well. With that, we'll take your leave. Thank you, Mr. Patwardhan, and get you some ideas for profit coming in